Hey, everybody, welcome back to the Realty Podcast with Anthony Griffin, Keller Williams 1, Kim Mathis Associates, Greensboro, North Carolina. First off, I want to start off by thanking everybody who listens to the podcast, who has been maybe wondering where we've been. Took a little bit of time off, but I'm back now, and I wanted to make sure we came back with a very impactful discussion and something that could help a lot of folks out there, especially our buyers. In a market like this, we're seeing huge changes in the interest rates, and that can cause to a lot of uncertainty for my buyers out there who are wondering, with a rate hike constantly coming, what could help them here in the near future? How can there be benefit for them when the prices continue to go up? And there's still very high demand, not nationwide. Nationwide, some homes locations are starting to slow down a little bit, but here in Greensboro, North Carolina, we still have a very overwhelming amount of demand that has not caught up to our supply. So because of that, I wanted to dive more into the rates, more into what it looks like for our buyers currently with these interest rates, what you could expect going forward, and how to think about it when you're out there making a home purchase. So as of June 14th, 2022, 30-year fixed rate was about 5.88 to 5.92%. Just to put that in perspective, June 14th of 2018. So I went 4 years back, so 2 years pre-COVID. The interest rate was 4.62%. And from June of 2010 to June of 2018, rates kind of bubbled and raised and lowered, but stayed between 3.5% and 5%. So we still had a very long period of time where rates didn't really move all of that much. So to have the kind of volatility and the fluctuations that we've seen just from the end of the first quarter to now the beginning of quarter three is a vast change as far as where the rates stand. There's a few ways to think about this, though. Think about this more as an opportunity for a future refinance. We know that these rates are going to continue to be very volatile until we're able to kind of curb the inflation gap. Because of that, now is not the time to overextend yourself with a home that you really need to reach your budget for. For my buyers out there, this is the time to really kind of hone in on what your true budget is in buying a home, to make sure you're not overstepping, especially with where the rates are. In a few years, it's going to be a prime situation for a refinance. Rates can't continue to stay this high and be this volatile for an extended period of time. So I know it can be scary going and signing that note now and signing that mortgage now and seeing the rate where it is. And then you look at all those other numbers going out all the way to 30 years. Remember, the average person stays in their home between about 7 and 10 years. If this is your forever home, all the more reason to do a refinance in a few years once the rates calm down and gets to a more manageable range. Not only will you end up with a better interest rate, but you'll more than likely have a considerable amount of equity built into your home already as well, which might be able to help you get rid of things like PMI, maybe do some upgrades in the near future, things along those lines. Something else that's very, very important to keep in mind too right now is the importance of shopping rates, making sure you're getting the best interest rate possible. This might be a situation where you see larger institutional lenders giving out a better rate than the average because they can afford to take that kind of short-term financial hit. So it might not be the worst thing in the world to look at a Wells Fargo or a Truist or a Capital One or something like that, a Rocket Mortgage for your rate now to try to get the best interest rate you can while things are so volatile. Also, though, one thing to keep in mind is a lot of lenders may be looking to give you the opportunity to buy down your rate. And rate buy downs can be a good way to go if you plan on staying in a home for a very long period of time, depending on how much you're buying down and what the cost out of pocket is up front. However, if this is going to be a home that you don't intend to be in for that extended period, if you're thinking this might be just the 3 to 5 year solution, rate buy downs might not benefit you. Because basically, what you're doing is you're giving money up front to that lender to get a lower interest rate. But the dollar difference of what you get for that monthly payment over the lifetime that you would have that loan may not be beneficial to you. And that's why it's always important to make sure you have the utmost confidence, not only with the lender you're working with, but also with the agent who's helping you on the buy side, to make sure that they've got your best interest in mind, to make sure they're giving you all of the facts and showing you exactly how the numbers work out. So keep in mind that regardless if we're still having some volatility throughout the summer, whether we have a recession, whether we have an increase in rates, homes will be available to the buyers who want to buy. But the main thing is to make sure you are not overextending yourself to get that home. Think of the home that you're getting now as the home for right now, maybe not necessarily the home forever. And that will help to kind of put it a little bit more in perspective, I think, to get you what you need versus what you may want. And then look to get what you may want in the future when the rates calm down, when you can get that refi, and then take advantage of the equity that you've built up because you've been in the home for 3 years, or now you've been in the home for 5 years. So keep that as a matter of perspective for my buyers out there. Just because the rates aren't that great right now, historically they are still very good, and they will get better. So thank you guys so much for listening to the podcast. Thank you for bearing with me over these last couple of months. I promise I will be sending these out much more frequently. I look forward to hearing from you guys in the meantime. If you ever have any questions, please reach out to me. Reach out to my team, Kim Mathis Associates, Keller Williams 1. Look forward to hearing from you guys and talking to you guys next time. Have a great week.